Hey everybody, welcome to Mortgage Today for Thursday, August 24th, 2023, and oh, what a day it was. MBS opened up down 5 basis points at the first hour of trading. Stocks were flat. Bonds were already modestly weaker in the overnight session and were losing ground real early. Slightly stronger jobless claims data. The excluding transport lines in the durable goods is possibly an inconvenience for bond bulls as well. Jobless claims came in at 230,000 on a 240,000 forecast. It was 239,000 previously. The 4-week moving average came in at 236,800 for in the week ending August 19th. Continuing claims fell 9,000 to 1.702 million in the week ending August 12th. Durable goods orders came in at negative 5.2 on a negative 4 forecast. It was 4.7 positive previously. Durable goods, excluding transportation, were up 0.5 on a 0.2 forecast. While house prices declined from 410,200 in June of 2023 to 406,700 in July of 2023. Don't be fooled. That's the highest July price ever and is up from 403,800 last year. Similarly, while inventory ticked up from 1.08 months in June of 2023 to 1.11 months in July of 23, it's again the lowest July level ever and well below the 1.31 months of supply in July of 2022. After accounting for seasonality, the housing market is profoundly tight. The Jackson Hole Summit began today, and the focus will be on Jerome Powell's speech tomorrow. As we await Fed Chair Powell's speech at Jackson Hole tomorrow, this challenge means that central bankers have a much harder time relative to last year's, according to Deutsche Bank. Bear in mind that a year ago, the CPI inflation in both the U.S. and the Euro area was running around 8%. So the way forward is pretty clear for policymakers, but now inflation has fallen by some distance. There's much more doubt on how sticky it will end up proving, and thus much more central bankers still need to do. Bond traders continue to mostly ignore signs of a calmer inflation and are instead finding other reasons to be defensive. Hope is not a strategy, even though it makes some sense to hope or even expect that a certain amount of selling will make yields attractive enough for the strategic shift amongst a broader swath of investors. Nonetheless, we need to see evidence of that in the chart, and it has yet to show up. For more than a few fleeting moments here and there, it makes more sense to remain in a lock bias until it does. After Wednesday's big rally ended with bonds near the best levels of the day, there is some small chance that the bond market will make a more exuberant approach to Thursday with a bit of follow-through rally. That said, there was a better chance of Wednesday's rally was a limited time engagement to blow off some undersold steam. It would have made slightly better sense for bonds to hunker down today ahead of Powell's Jackson Hole appearance on Friday, and that's exactly what happened. MBS ended the day down 21 basis points. Stocks lost 6 points. Ended the day at 97.82 on the bonds, so 97.82 is right in the middle of this very wide range with a ceiling of bad and a floor of terrible. We also got interesting news, non-mortgage or bond related, but it's kind of cool. There was a breakthrough in brain reading technology. So advances in digitalized surgical implants paired with brain wave reading AI have allowed 2 speech paralyzed patients to communicate with unprecedented ability, according to a pair of studies published yesterday. Some remarkable stuff. If you want to find out some more information to help you sell more, check out our blog at thatmakesense.com. In this edition, we address fear through frames, the 3 Ps: predict, preempt, and prevent. So predict what your borrower is going to say, preempt it by addressing it early to prevent them from saying no. So check it out at www.thatmakesense.com.